Are you richer than you think? Well, 70% of Americans believe that they're middle class, but in reality, only 50% of them truly are. That means that there is a lot of people that are overestimating their financial standing, or there happen to be several of you out there that are richer than you think. And truth be told, middle class isn't as simple as you think, because it's not just middle class anymore. No, we have a lower, a middle, and an upper middle class designation. As if life isn't complicated enough, the middle class needs to have 3 different categories. With all this complexity and levels, it begs the question, what class are you really in? And that's the question that we'll be tackling today. And I'll make certain to cover it from the lens of income and also by net worth by age for a little bit of a broader perspective. Because age plays a big role in where you stand. Let's face it, a 25-year-old millionaire is a completely different story than a 65-year-old millionaire. As a quick definition, net worth is adding up all of your assets like the value of your home, value of your car, savings and checking accounts, and also your retirement accounts. And then you subtract all of your liabilities, like the mortgage amount that's left on your home, credit card debt, car loans that are outstanding, and also your student loans. In essence, you're adding up all of your assets and you're subtracting out your total liabilities to give your total net worth. And most all of us have an extremely low or even a negative net worth when we're in our 20s. And that slowly increases over time by each age group as we're able to slowly save up more and pay down our debt. In this video, not only am I going to break down the net worth by age group, but I'm also going to showcase the average or median 401k by group. And I'll warn you right now, 66% of all Americans believe that they're falling behind in their retirement savings. So this will be a good idea for everyone in the least to do a quick gut check on how their retirement savings compare. From there, I'll also share the top factors associated with a higher income and what millionaires are doing differently than everyone else to build their wealth. And at the end of the video, I'll list out what the net worth by age group would look like in 10, 20, and 30 years based on inflation. Regardless of where you're at today, you truly need to think about where you want to be during your retirement a little further down the road. And for all my references, I'm speaking to the United States class system based on net worth and income, which is very different than the class system across the world. For example, in the UK, class could be viewed more as a birthright, not a basis of how much money you have saved up. So for clarity's sake, I'm keeping this video focused on the United States. I'll start off by covering the income levels by class, where the median income is just over $74,000. And as a reminder, the median is the exact middle, and it's quite a bit different from an average. Median is often a better gauge because in an example where we list 7 different people and their salaries, the average is $500,000. But there's only one person that made $500,000 or more, and their $3 million salary completely skews the data. But the median, or the exact middle, would be at $100,000, and that happens to be a better representation of the overall group. And this is why median is often a better gauge of reality. Now, the lower class is considered having an income of $30,000 or less. Lower middle class is between $30,000 and $58,000. Middle class is $58,000 to $94,000. Upper middle class is $94,000 to $153,000. And the upper class is $153,000 or more. This is a very broad range of numbers when you consider that the middle class in total ranges from an income of $30,000 up to $153,000. And this data is slightly outdated seeing as how it's from the 2022 Census Bureau report. I'm sorry, but to be in the middle class at the low end is a very different lifestyle than those that are at the top end of the middle class at $153,000. But everyone needs to keep in mind that these are very broad strokes for classifying people. What I mean by that is that someone making $100,000 in Des Moines, Iowa is very different than someone making the same amount of $100,000 in Los Angeles. Just like it is completely different to compare a single person making $100,000 versus a family of 4 with the same total family income. This is why income alone is just not a very good gauge of where you stand being in the lower, the middle, or even the upper class. And there's also the factor of age by income level, where Pew Research had shown that the largest disparity in class was seen by those 65 and older when comparing income between the years of 1971 to 2021 and accounting for inflation. This group did see a little bit of improvement, but they are the largest low-income group by far. But the overall theme across the majority of the age groups during this time period was that the middle-class income group had consistently shrunk, and the lower-class section had grown faster than the upper class. The gap between the rich and the poor, well, it's only grown over time. The Pew Research also looked at the impact of education and income during that exact same time period. where the overall outcome shows that the middle class is shrinking among all groups. But those without any college, well, they did show massive increases in the lower income bracket. As with anything, there are so many different factors to consider for every person's specific situation. And if you want a better comparison of your income, age, education, and where you live to verify if you are truly middle class or not, then I do have a link to a calculator from Pew Research that allows you to make a selection for all those factors. And then it will tell you how you compare to people in your exact same situation. Part of the goal of my channel is to educate people on different ways to invest. And I often get questions about how to invest on the ground floor before companies take off. One way of doing that is by investing in Regulation A offerings before they're listed on an exchange like NASDAQ. One such company is looking to disrupt a $120 billion industry with its video compression, real-time video communications with its proprietary vast platform of software, hardware, and subscription services. Today's sponsor, Reticulate Micro, has a proprietary system compressing images up to 5,000 to 1 and video by nearly 98%. The applications for secure compressed video with ultra low bandwidth, well, it's nearly unlimited for the military, first responders, and even something so simple as cruise ships. And they see one area of the video encoder market to have a 7.6% CAGR over the next few years. They're looking for a limited handful of investors for this particular round of funding, and they have plans to go public next year. If you're interested in learning more about investing on the ground floor, well, I do have a link down in the description with more information. In a video like this, I can only provide generalities and larger scope information. But if you want specific details, the least that I can do is provide you a resource like this so you can check it out on your own. Reviewing income is, well, it's nice and all, but it doesn't really tell a good story about if you're truly middle class or not. Honestly, it's becoming more common to have a couple making $200,000 a year and being considered upper class, but in reality, they're still living paycheck to paycheck like the rest of us, where it could be possible that they have little to no retirement savings at all. And I am a bit surprised to learn that the median retirement savings in the US is at $86,900, and that's based on a 2022 report from the Federal Reserve. And if we look at the median by age group, the boomers in their 60s are just over $207,000. But even with Social Security, that number is extremely low. If you utilize the 4% rule, where you should be able to withdraw 4% of your investments indefinitely in retirement without losing any money, then with only $207,000, that withdrawal would be just over $8,000 a year, or about $690 a month. Sadly, that doesn't really cover much for monthly expenses. For that reason, don't look at this chart and get comfortable if you're slightly ahead of it, because when you factor in inflation, you're going to need a lot more than where the boomers are at today. And of course, I'll make certain to list out those future numbers accounting for inflation a little bit later on. Overall, the retirement savings do factor into a person's net worth. And that's why it's also important to look at net worth as a better gauge of class, because it's a stronger reflection of financial habits. So based on the US Census data of 2021, the breakout of class by median net worth is listed as lower class at $12,000, lower middle class is at $61,000. And of course, there's middle class at $145,000, upper middle class is $269,000, and the upper class is at a whopping $805,000. And when we look at the median net worth by age group, it isn't really surprising that the older age groups do stand to have the most. Well, except for those that are 75 and older because, well, they're already living off of their investments, and it begins to taper down. It goes without saying that time is an investor's best friend. And to make that point more clear, here's a chart that's outlining the odds of making money in the stock market, which greatly improves over time, where a person only stands a 62% chance of making money in just having 1 month's worth of investments, but they do stand a near 100% chance of making money if they hold it for 15 years. And this is why I'm constantly looking at investments over the long term within my videos, because the chance for success only improves. Now, I do need to state that even when looking at median net worth by class, there's a lot of factors like location, age, and family size that can play a part in this. For example, if a person has a lot of equity in their home, it isn't exactly something that they can easily take to the bank. Instead, they could still be living paycheck to paycheck. This is where good financial habits like creating a savings and spending goal, not allowing for lifestyle creep, and living below your means can either make or break your financial status. I hate to break it to you, but just because a person looks wealthy by having a lot of flashy material objects, along with increasing their debt, it doesn't really make them wealthy. Take me, for example. I have one neighbor that drives a Porsche Cayenne. Another neighbor has 2 BMWs and an Aston Martin. But you want to know what I drive? I happen to have an 8-year-old Ford F-150 that still looks pretty much brand new. And here's the kicker. Those neighbors are still working, and they're probably going to be working for several years. And yet, I was able to retire young. This is where lifestyle creep, debt, and comparing yourself to the Joneses, it's only going to kill your net worth. Funny enough, I had a viewer that made a comment on some of my B-roll in another video, that my house doesn't really look like I'm wealthy. But to me, that's a great compliment, because I don't want to be considered flashy. Because at the end of the day, true wealth should give a person something that's invaluable. And for me, that's freedom over time. I can do what I want when I want, and I can be present and engaged for my young children for all of their different activities. And just like many of you, that wasn't the case for my own parents. So if you're a slave to your debt and the objects that you own, then you might want to reevaluate what's important in life. Overall, in looking at all these different types of numbers like income and net worth, they are directional and they're helpful in creating a plan to help push your income or your net worth a little bit further up in the spectrum. Which leads me to, what sets the upper class apart from everyone else? How are they building their wealth differently? According to a report from the IRS, the average millionaire has exactly 7 sources of income. And I think that you may be surprised to learn that you may have more of them than you realize, like dividend from stock, income from a paycheck, rental income, royalty income, capital gains from appreciated assets being sold, interest from bank accounts, and the one that I think truly sets them apart is profits from a business. Granted, there is the saying from Andrew Carnegie that 90% of all millionaires come from real estate, and that happens to be somewhat true. But experts do believe that in today's environment, it comes mostly from having a business, which is why side hustle videos and making money on the side are so popular today. So, quick question to you. How do you think that you're going to most likely make $1 million? Will it be from real estate, or is it going to be from building a business from a side hustle? Now that we've covered the high-level numbers of net worth by class and the retirement accounts by age, let's review what those numbers may look like when you look into the future with an inflation of 3.28% a year. And no surprise that it looks like the upper class breaks 1 million in 10 years. And when we showcase what this could look like in 20 years with inflation, the middle class is more than what the upper middle class is today. Generally speaking, at 20 years, the classes appear to be nearly doubling from where they are today. And no surprise that the goalposts just keep moving. And suddenly, at 30 years out, the upper class median net worth may be nearly $2 million. Now, I'll cover what the retirement accounts may be at when we account for inflation for these same time periods. And I believe that this is important to at least give you a little insight as to what to expect looking forward. And you can see that, once again, all the numbers nearly double at the 20-year mark. And that happens to be the power of compounding inflation working against all of us. I show you this because it's what today's retirement accounts should be worth in the future when you're accounting for that 3.28% inflation. But this can also be a tool for setting a goal for yourself. But with it being the median, this is the lowest bar that you should possibly consider. Let's say that you're in your 20s today, and based on today's median balances and inflation, when you look at the 30-year out column, which would then put you at your 50s age bracket, because someone in their 20s today will then be in their 50s in 30 years, then the median would need to be $682,000. Once again, I would consider this to be the lowest bar to set for yourself, and everyone should be setting a retirement goal and saving and investing accordingly. If you take anything from this, set your retirement goal early and begin to invest in yourself as early as you can. And of course, it's never too late to start. And if you're looking for some of the best exchange-traded funds to invest in, then I highly recommend the video right here on your screen. Thanks so much for watching.